Hi, it's Kevin Schumacher here with the Kevin Schumacher Team at eXp Realty. I want to bring to you this month's market trends report and really take a look back at where we are from last month, finishing out third quarter, as well as the forecasts of going into fourth quarter of 2019, as well as what 2020 looks like. So the big talk and buzz right now is are we going to be going into a recession? The media has talked about it. There's a lot of numbers and data that's been shared out there. What we're seeing right now is that we're starting to continue to see a little bit of flattening in the market, where people ask the common question of are prices dropping? What's happening? Well, what happens is when you're in an appreciative market and things are appreciating going upwards, typically if a seller or an agent overprices a home, eventually as the market continues to go upward, the market value will catch up with the overpriced home, and 60-90 days later the home will go under contract and the home will sell based upon condition, location, and so forth. Well, what happens when you have a flat market is time goes on, more time goes by, the values are not appreciating, and so they don't meet that overpriced value, which in turn means that you end up, sellers are doing price reductions if they're motivated and needing to sell their home in a timely manner. So again, back looking at the market and looking at the numbers as far as in the topic of recession, Duke University, Wall Street Journal, National Association of Realtors did a study, and what they found is that they believe we're going to have we will be going into recession as early as fall of 2020. Originally, they were guessing 2021, but now it's fall of 2020. Again, third, fourth quarter is what they're forecasting. What does that mean? Well, when you look back at the last five previous recessions that we've been through, in 1980, we actually had a 6.1% increase in home values. 3.5 in 81, in 91 a little drop of 1.9%, 2001 6.6, and then obviously 2008, which many of us remember, at least I do clearly. We had as almost 20% drop in values. And what happened there was one, we had a lot of inventory. We had 10 times the amount of inventory that many markets have today, in conjunction with we had all of the bad loans, the mortgage fraud, and so forth that was going on. So the housing inventory definitely led up to the recession that we did hit back in 2008. So what they're forecasting is, based on numbers and data and what the supply is of inventory, is that we actually are going to see a bump up in home values in the next recession. So there's a lot of different things and factors that go into the recession and how it affects us. Number one thing that we have going for us as far as the housing market is low interest rates. You can see in the graph, we're dropping down. We're in that 3.75, 4% range, give or take. The market's fluctuating back and forth, but still record low interest rates which is continuing to drive the economy. The other thing is the projected mean of home price keeps going up. So you'll see the dip in 3.6, taking the dip to 2.5, down to 2.2, and then back up in 2023 to as much as 3.4%. Again, these are national numbers. When you look at the Colorado Front Range here locally, we've had anywhere from as high as 15 in one market, and one market actually had 19% appreciation just 2 years ago. Now we're somewhere in that. We were most of the summer 5 to 7%. We're probably more like 3% right now. And again, 3% to even some flat spots, depending on what price point of the market you're in. When you look at median asking for rent, again, another factor that's driving the buyers to purchase homes is because rents keep going up higher and higher. It all goes back to replacement. When you cannot replace and build a home for the cost of existing, you're going to continue to have those values go up. 26% of millennials are saying in the next 12 months that there's a high likelihood that they're going to be buying a home. So when you go back a couple of years, it was the last thing that were on millennials' mind. Now as they're getting older, getting more settled in their jobs, they're seeing the value, they're seeing that how wealth is built through real estate. Now all of a sudden there's a change of heart and a focus on home ownership. Months of inventory. Again, what you'll see is we had a peak of inventory, a drop, and then a peak as we were starting to climb and flatten. Now in the last 2 months, we're actually starting to see the inventory decline again, which is the projection of low inventory, which is going to help us push right through the recession and even have a little bit of a bump up as far as values. So let's break it down locally what that looks like as far as the month of the numbers for the month of September. When we look at Larimer County, there's 1,138 homes currently active in Larimer County. 411 homes actually sold last month, which is down actually 25% over the month of August. Average days on the market 68, and we're looking at average sales price of $458,000 again for Larimer County. 2.6 months inventory, meaning that if 2.6 months go by and not one other home hits the market, we would be out of inventory. When you look at national numbers and when you look at buyer's market versus seller's market, statistically they say somewhere between 4.5 to 5.5 months of inventory is a healthy market, and anything below that is a seller's market. Anything above that is a buyer's market. When you look at Weld County, 1,026 homes currently on the market in Weld County. 477 actually sold last month. That's down that's down 9% from the previous month, and we're looking at average days on the market 67 days, average sales price $392, and 2.2 months inventory in Weld County. Boulder County, 755 homes currently on the market, 274 homes sold last month. That's actually down 17% from the previous month. 64 days average days on the market, and you're looking at $712,000 average sales price for Boulder County, and 2.2 months inventory as well. So 2.5 months inventory, which is still pretty consistent for the last couple of months in Boulder. Denver Metro, 4,311 homes currently on the market. 2,406 that are under contract, that sold in the previous month. That's down 15%, which again, seasonality-wise is pretty common. 32 days average days on market, which is actually up a little bit. We were hovering in the 14 to 17 days on the market in Metro. And $504,000 is the average sales price. 1.8 months inventory. So again, that number is down 5.26% from the previous month. So again, taking a look at the market, we believe because of seasonality, we're going to have little flat spots, but right now, pretty typical with our Indian summers, we're going to have a little bit of a surge in the market from now until we get to that first snow, or actually we just had the first snow, but till we start getting measurable snow. And so typically we'll stay fairly busy going into the first part of December. But again, remember, if you're thinking of selling your home, the inventory is really low. So we have fewer buyers, but better buyers. The people that are selling aren't tire kickers. There's a motivation for them to sell, which means that if you're a buyer in the market, there definitely is still opportunities. One, for the motivated sellers, and two, for those that do have to sell, they're going to have to start pricing them a little bit more aggressively because that buyer pool is shrinking. So like always, if there's anything we can do to help you in your real estate needs, we appreciate all the referrals. That's how we grow and build our business. Feel free to go to kevinselco.com, and there you can find out what your home is worth to get an estimate, or feel free to give us a call, 720-230-3030.